All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So the spiders did pull back for the majority of the week. You see there is Monday. We kind of had a flattish to negative day there. We tested kind of the upper band of this broadening channel that we're looking at now. Then we pulled back, as we got through the Fed, we got through Apple earnings, and then we got a little bit of a bounce on Friday. But a lot of headlines this week. Regional banks, again, we talked about that last week. PacWest, Western Alliance kind of in the forefront there. And obviously the KRE in general, that did take a pretty good dump Thursday. And this was post FOMC. And really what kind of did it is you got rumors that PacWest is looking for a buyer, essentially. And that came out mere hours after the Fed's press conference, Jerome Powell's press conference on Wednesday, and where he basically said that the market, the regional banks were fine, don't worry about it, that type of deal. And, when you hear news that's completely contrary to what the Fed chairman just said, of course, that's going to cause some panic. So we did see more regional bank issues. And then on Friday, JP Morgan kind of calmed fears a little bit. And you can see this doesn't look like much here, but that's an 82% gain there for PacWest. On Friday, Western Alliance was up almost 50%. Yeah, 49 and a quarter percent there. And they kind of calmed the fears by saying, like, hey, like some of these fears are overblown. I think the market respects JPM a little bit more than Powell at this point, because JP Morgan's the one who's going to have to buy these banks if they do go under. But for right now, bottom line, market did come a little bit off the lows. As for Fed policy here, so they did open the door to pausing. I think we talked about that before. I know I talked about it on my channel this week, and they can do that. The Fed funds rate is now over 100 basis points ahead of the 2-year Treasury note yield. Currently, the 2-year Treasury yield is sitting at 3.92. Fed funds rate's just above, it's between 5 and 5.25. So it's over 100 basis points. So they can technically pause at the next meeting, and I think they likely will. The market did not really react all that positively, though. I think the market kind of there was a little bit of uncertainty, and Powell did try to talk that down a little bit, basically stating that inflation is still too high, which we know is likely to be sticky. And that's something the market's going to have to deal with moving forward. As far as the market's reaction, though, we did get jobs data on Friday, and that also helped out with the bounce here. So, say what you want about the jobs number. It may be cooked. It most likely is. But right now, as far as the market is concerned, we're having a little bit of a changing character here. You can see on the futures, we had a dip initially when the report came out, and then we rallied up, right? So this is a strong jobs number, and typically that's been counterintuitive, right, for the last, really the last almost 18 months now. So since January 2022, when the Fed started really, when the market topped out, it's been strong jobs is bad because that means more rate hikes, right? But right now, the market is more concerned about a recession than it is about more rate hikes. I mean, the Fed basically said that they're going to pause. So now we're into an environment where you could say bad news is bad news again, and good news is good news, right? So regardless of whether that number is cooked or not, the market's reaction is what we care about here. And the market's telling us that, what I just said, bad news is bad news now. Take a look here at Crude if you want some evidence of that. This week, this got whacked 1, 2, 3, 4 down. As soon as that jobs number came out, it rallied up with the market. Same thing, you could even make a case here with natural gas too. So energy kind of trading positively correlated. Take a look at this. It was green last couple of days of the week with the spiders. And then this week, 1, 2, 3, 4 down before bouncing on Friday. And what did the spiders do? 1, 2, 3, 4 down before bouncing on Friday. So energy starting to get, I don't think this lasts all that long, but right now there's almost a positive correlation here between energy and equities as you are kind of getting that, okay, the market's looking at recession now as opposed to rate hikes. So just an interesting dynamic change that we should be paying attention to right now. Again, I don't think it lasts that long. The market's going to, I think the market right now, we're basically pricing in rate cuts. Fed fund futures are, I think I saw as low as 3.7 by early 2024, and I do not think that's going to happen. I think the market is seriously underestimating inflation. It's more of a secular trend, not cyclical, but that's a whole different story here. We're just here to talk about it. In the short term, right now, and really all that matters is, we pulled back and we held support, right? So 404 was going to be major support there. If we broke that, then that moves, that opens the door for a move down to possibly this trend line here. So pretty good, significant downside there. But for right now, the market can still have one more move up, right? We held support and we got a bounce. That's really all that matters. If we bounce up, we're headed to 420 and, maybe filling this gap there on the SPY. And the triple Qs, they did fill that gap this week, finally, Monday. And then we, closed up near the highs at the end of the week. Again, we're watching this upsloping trend line. There's also a gap right up here around 329 that kind of coincides with that level. So we'll see, maybe that can get filled. That's really the upside I see right now. And again, a lot of bulls coming out here and talking about how great everything is and whatnot, but I'm going to show you it again. It's not even 7 stocks. It's like 4 stocks. We talk about FAANG. Okay, Apple had earnings. They did really well, and they powered up, and that helped the market out a lot. It's really Apple, Microsoft, Meta, and Nvidia. It's not even Tesla. I mean, like Tesla, that's a weak chart. It did get a nice bid on Friday, but this has not been doing anything since mid-February. Google's been in a bit of a range here. It did have a nice pop off the lows. Amazon, that's still below its February high. So it's really just 4 stocks. And just to put that into perspective, I'll show you the equal weight S&P again. Since February, this is down 8%. Equal weight triple Qs, this is down 3-4% since February, whereas the actual triple Qs is positive. So it's really just 4 stocks here that are holding up the whole market. And again, it's just not good. It's not bullish for a long-term. It's not structurally sound for a long-term rally, and that's why I still maintain that this is just a bear market rally. It's a long one. It's a grind, and that's what bear market rallies do. That's what bear markets do in general. They don't just go straight down. They grind everybody out. They grind out bears. They grind out bulls. And that's just the kind of environment that we're in. But importantly, again, you lose 404, then we can go down significantly. But for right now, I'll give the bulls the upside bias here. It's been taking them a long time to really get this going. But if we do get up there, I think this 420 to 422 area on the SPY is going to be very, very good resistance. Anyways, let's get over here to the Russell 2000. So IWM, again, coming off the lows on Friday, just like everything else, but still below the moving averages here. I don't see this getting much through 180 if we do rally up here, but this is still a very, very weak chart. We had that little kind of pennant breakdown recently. We've just been chopping in that lower range. That's not bullish price action. And again, on the weekly and the monthly, this is setting up for a move down to 140. So Russell is very weak here. Again, lots of regional banks in the Russell 2000, and that is heavily weighting it down right now. And not good to see small caps. Again, another indicator here. Small caps are underperforming. That's, just kind of goes to my point here that it's really just 4 stocks holding the whole market up here. But anyways, the Dow, again, just like everything else, came back into this trend line here at 331, held the 50 MA, and then got a bounce on Friday. So, I can still see one more new nominal high potentially on the Dow, but that's really about it there. Dow kind of just stuck in this little range here. Anyways, let's get over to bonds. So the 2-year note did get a bid, so that did come up, especially on Thursday too. So again, Fed kind of indicating a pause, so bonds kind of getting some relief. If we look at the yields here on the 10-year, again, that came in, so negatively kind of correlated with the market, obviously. Still don't see a ton of downside in yields right now, but again, they're just in a holding pattern, so nothing really too new to add to it. Really just kind of stuck in this range. But again, if you get the market kind of more sniffing out a pause at the next meeting, you'll probably see bonds get a bid there. All right, over to home builders. Cannot do anything wrong here. XHB, held up nicely this week. This can still make one more pop here. I just don't see that much more upside in them, but they've been defying gravity for a long time. There's the ITB. This is still holding up really well. I just think at some point they're going to have a day of reckoning here. The rate hikes have a lag effect, and they're still seeing kind of performance from conditions that were in place last year. But pretty soon, those rate hikes will start to filter in the economy, and they'll probably start happening it's going to be one of those deals where it doesn't matter, and then it all matters at once. So either way, home builders hanging in there okay. Nothing really, no damage here, just really overbought. VNQ here, general real estate. I still don't like this pattern here. It's just consolidating in a range here, and it should have been able to break out by now. So you had, 7-8 days of bear flag here, and then it broke down. It shouldn't take 4 or 5, 6 weeks to break through that level. That doesn't mean it can't get a pop here, but I think it'll be short-lived if it does, maybe to 85.50 or so on the VNQ. For XLF here, that was up 2.5%. So all financials getting a bid. Friday, still a weak chart below the moving averages. I'm not a fan of it. Really, JPM is really kind of holding up. JPM and Berkshire really kind of holding up the whole ETF there. We mentioned KRE. This is still into some support here. It is oversold. If we go on to, let's go to a weekly. We went into this level, and then, we consolidated above it. When you consolidate, you can push through, right? And then we went right into this pivot. So you had a wedge pattern here, the green, see the green there? We broke down, and then we reversed. That's where the institutional money is sitting. That's where it got defended. So it had heavy volume on Thursday, and they did push it up there on Friday. I don't see a ton of upside with them. That's really, I've been telling you guys that for weeks now. I know a lot of people tried to buy. I did play some KRE a few weeks ago just for a bounce play. We took a small winner on it. I just didn't see the upside, and we talked about this in these videos. Like if these were going to bottom in this area, they should have V-shaped, and they just went sideways. So that told us that it was likely going to go lower, and it did. They're very oversold here. Anybody who bought in this area at 42, they're probably going to turn into a seller when it gets up there. So I just don't see the upside right now. Maybe I'm wrong, but the risk reward just for me isn't really that favorable. KBE, same thing. Broker dealers, they saved it on Friday. So we started to break down out of that bearish pattern. You can see there on the weekly, down move, sideways chop. And then we tested that 420 area. They saved it on Friday. Still not a strong chart though, but near term, it could probably go back test 450 somewhere in that area there. But broker dealers did get the save at the end of the week. All right, so shifting gears here to crude. So crude popped up 4%. I believe someone, I didn't really hear anything about this, but somebody had to have gotten margin called. I would say maybe on Pac West or Western Alliance or one of those, because you can see here on crude, we'll go over to, this is Wednesday night, but it's really the Thursday session. Right at 6 p.m., the Globex Open, it dumped from 68 to 63 in one, basically like 2 minutes time. And then it just popped right back up. I think somebody got margin called and they had to liquidate. But, crude went right into that double bottom. I told you guys about $70 last week. It did shoot through that. And then we held double bottom. I think crude's really oversold. It should get up to 75 in the near term, 74 to 75, maybe 76. And then we'll see from there. But it did hold double bottom. It got really oversold. I think there may have been margin calling going on or forced selling going on all week because you look here on the hourly, this was just getting pounded. So somebody was liquidating here. I don't know if they were just beating the recession drum all week, which they were, and maybe that was causing it, but it did go down there and pierce double bottom and it held. So I think it does continue to bounce here. And upside, like I said, 75, that's just going to back test this trend line. There's also the 20-week moving average right in that vicinity. And then you have, this is the area where you broke down, right? So that would be a logical back test there, but big bounce there for crude. It was down, I think I calculated out, it was around 16% in 8 hours from this drop at 75 to that 6 p.m. drop there. Just incredible volatility there in energy. XLE, that is oversold as well. Remember, hitting this trend line again. The only problem now is you have lower highs going into this trend line. I think your buy level on XLE is down here. I think it wants to go down and test that area. You should get a back test of 82.50, and then probably one more drop down into this area. But we talked about this, second half of the year for energy should be very, very strong. So we'll see how that shapes out here. But XLE also taking a hit, obviously, just like the rest of energy. Same thing with XOP there, basically holding that 115 level. That should have upside to about 125, 126 here in the near term. And then OIH, oil services, held 250 again before bouncing. We'll see. Maybe that can go back up and test that 20 moving average. But all energy really getting a hit here. Nat gas as well. Nat gas had such a good Friday last week, popped up nicely and then gave all those gains back. It did come off the lows this Friday though, and not a terrible pullback pattern here, but just kind of stuck in this range for now. But energy kind of with that, it's near term, we kind of saw that flip to a positive correlation with stocks. We'll see if that continues moving forward here as we kind of get that bad news is bad news type trade here. Anyways, let's get over here to some ag names. All right, so we'll start off with DBC here. Again, DBC kind of giving back some gains here. We had that nice pop here after that failed breakdown, last month. And, we came up here and we just couldn't hold the gains, rolling over there. And now kind of just this upsloping trend line acting as somewhat resistance again. So you can see we stalled out there. Again, right now, if you get back above 2350, that's your breakdown area, then you can make a move up, back to the highs here. If not, then, maybe in backing and filling mode, maybe in correction mode here, possibly for a move down into the $20 to $22 range. But DBC kind of falling off the cliff there. Mosaic, some of these potash names as well. These are getting a little attractive down here. Take a look at MOS. We talked about this in my members live stream on Thursday. I like it in that $34 to $35 area. You see that 618 right there, previous high. And basically that's where you're going to back test. So I like, these potash names are starting to get attractive. NTR, right into that 200 week moving average. You see that previous high right there. That was an all-time high, I believe. It's a new issue, but new all-time high nonetheless. Then it got back tested there. You couldn't break out. You broke out, you back tested it. So that should be where the money is sitting, right around $60 there. So I like NTR in that area, and an Intrepid right in this kind of $15 range. You see that big green bar, little consolidation, and this is where you had that big bear consolidation here from the move down. That's where it failed. That's where the money is sitting. So that's where I like IPI. But interesting action here, and we got some backing and filling there in the ag space, but definitely coming into some attractive areas now. Uranium not doing a whole lot here. CCJ, I told you guys 28. That's where we went, and then backed off there. So nothing terrible. If this consolidates, it can push up to 29. But right now, just kind of hanging in there. Same thing with URNM, really just a nothing burger this week, although it did get a pop on Friday, but you still got to get back above this pivot here. So right around $32, we'll call it. You get back above that, then you can potentially work your way up to 34. But again, still, I do not like this weekly pattern here right now, unless you get back above those levels there. But really, uranium just kind of in a bit of a range here over the last couple of weeks. Anyways, let's get over to the DXY, and we'll flip over to Trading View for that. All right, so dollar index, hanging in there, really kind of a nothing burger this week considering the FOMC. I still think this has to go down and test 100. So that's where I'm kind of looking for it to go, maybe a slight pierce of that. And I think that's a good potential buy area for the DXY. But again, it's been very muted here lately, despite all the fireworks we've had going off here with regional banks and so on and so forth. But DXY, I still think it needs to go test 100. Over to gold here. So that just barely missed a new all-time high there. So high was 2,085.40 and the high is 2,089.20. And we can see in 2022, we got to 2078.80. But so we did slightly pierce that top. We did not pierce the new all-time high. I think it will make one. Again, if the dollar does pierce that 100 handle, that could give it the juice to get up there. We did pull back pretty good on Friday. Maybe that's an indicator that, right now gold is up on bank fear, right? So people want real money, and they're worried right now because there's obviously banking issues. There's bank runs, so they want to put their, where do you go? You go to real money, you go to hard assets. If the bank fears get calmed, then you can see gold pull back here. I think it'll make a new all-time high, though, if you do get that DXY to get to 100, and then I think you'll probably have to back off from there. But again, that could coincide, as long as, if there's more banking problems, then gold is likely to hold up. It's really that simple. But for right now, it did do a slight new all-time high, but no new closing high. GDX, I think, wants to get to about 37. So there's about, that would kind of coincide with that DXY level as well. There's a big gap to fill right there with that big sell-off bar on the weekly, and then you kind of have this tightening range right here on the daily that you can see, and that would be kind of your logical upside there for GDX. But I do think it wants to make one more little push here. Silver also holding up as well. It did back off again on Friday here. I just think it's very overbought currently, but again, holding up well, and again, it's up on fear, so you have to respect it. Platinum back testing 1040, so that held up really well. Nice pop, and this has a really good chance to put in a higher low here. Ultimately, I think this wants to go test 1200 right around that pivot there, and that's holding up well on the bigger time frames as well. We haven't talked about palladium in a while, but I want to show you this. I do like palladium here a lot, and I'm going to show you here on the monthly. So again, we're going into this big consolidation area, and you've got that 100-month moving average right in that area as well. I believe there's also a fib retrace right here. That's not the one, apologize. There we go. There's a 75% fib from the 2018 low. And then if you take this low all the way back from 2008, you got the 618 there as well on palladium. So I like palladium in this level, possibly even for a move up to 1800. So this is a nice monthly chart pattern. It will take some time to play out, but palladium, I haven't covered it in a while just because it hasn't been that interesting. It's been kind of all over the map. It was just kind of going sideways for a while, but I do like it in this area. So I'm keeping an eye on PA futures. For copper here, that did continue to go sideways here. So still inside of this red bar. We tested that $4 handle and backed off. So I still think this has to go to 375, but it's holding up for now. So we'll see what it does next week. Lastly, Bitcoin. So Bitcoin's interesting here. So Friday, we got a pop, right? And what's different about that, right? Bitcoin has been up allegedly on banking fears lately, right? And right now, and on Friday, it was up with the equity markets. It was up with the regional banks. Gold was down Friday. Bitcoin was up. So that tells me it's behaving a little bit more like a risk asset as opposed to a safe haven. So just, a little bit of a nuance there, something to pay attention to. As far as the pattern, nothing's changed here. It can still get to 32,000. No issues right now. If you lose these pivots, then I think the top is in. But for right now, it can have one more move up. So we'll give it the upside bias there. All right, lastly, let's get back over to the spiders here. So just to recap, again, right now, same thing here. As long as we hold 404 on the SPY, we can, we'll give the bulls the upside benefit of the doubt to 420 to 422. That's really that simple. We lose this area, then I think you go test this trend line pretty quickly. If you lose this trend line, things get very interesting. You're probably going to have to go down and test 380, maybe 377, we'll call it. But for right now, as long as they hold this area, markets still can hang in there. Just be aware. It's literally poor stocks right now, and that's really the whole market. So just be careful here. Breadth is terrible, and I think that this rally is kind of on its last legs here. Anyways, guys, gonna wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you all next week.